So let's go on. Let's move on, and let's talk about a topic that I know is a favorite of yours. In 2008, we suffered a global financial crisis, and the U.S. Fed led other central banks around the world into an unprecedented period of slashing interest rates. The central banks control them in the short end of the curve, but they also instituted policies of quantitative easing where they bought debt securities and swelled their balance sheets further out to get rates lower, further out along the yield curve to stimulate spending and borrowing, to stimulate the economy and to inhibit savings. And in my opinion, we're 11 years later now than that crisis, and that program continues. The liquidity is enormous that's in the system, and it's almost like an addiction to me. So I'd love to hear your take on central banks and how they're affecting markets and what that means, for specific, for just the world going forward into 2020 and beyond.
Holy cow. We could spend hours talking about this subject, and you're setting me up here. But this is my favorite subject. And when I've done seminars, this has always been the favorite topic. And I would get on my soapbox regarding the Federal Reserve. But the biggest thing to me is the fact that so few people really truly understand what the Federal Reserve is and what a central bank is. And we can take it back historically, and I'll bring it forward and I'll answer your question. But going back historically, the thing that really gets me regarding having a Federal Reserve or a central bank is that's the whole reason the United States of America exists, is that we left England, we came over here, we created the colonies, and we created the colonies in order to escape. A lot of people say, well, we were trying to escape the tyrannical government of England. But if you get to reading what the forefathers wanted to do and why they came over here, was to escape the Bank of England, which was a central bank. They didn't like the central banking system. And so there was a time when Benjamin Franklin actually, after the colonies were formed, and he went back over to England, and he was asked, why are the colonies prospering so well? And he said, well, we issue our own money. They had something known as colonial scrip at that point in time. And then when the Bank of England found out about it, led by the Rothschilds, which, by the way, started with the 11 other family entities, the Federal Reserve Bank over here, when they got wind of that, they're like, oh, whoa, wait a minute. We can't let them control their own money, because they know. And there's actually a quote from Maven Rothschild saying that, allow me to print and control the money, and I control the people that make their laws. So basically, Rothschild knew that, control the money, you control everything, basically. And the fact that they wanted to come in and take over is what started the Revolutionary War. That's why the Revolutionary War happened, is because the Bank of England came over and wanted to take away what the colonies had done, which was issue their own money. So we have the Revolutionary War. We win. We're fine. We're independent now. And we have our Constitution in 1776, and then things progress, and then we get to December 28th, 8 p.m., December 28th, 1913, and we pass the Federal Reserve Act. And you can look at history. There's anywhere from 3-1 to, I've read 20-3 was the vote that night that passed the Federal Reserve Act, which basically gave control of monetary policy back to the Federal Reserve, or created the Federal Reserve and gave it back to a central bank, an independent banking institution. And the only thing I can think of is our forefathers that fought, and all the people that died in the Revolutionary War to protect this must have been turning in their graves to see that just from 1776 to 1913, everything that they had fought for and worked for was gone, and we're right back to having a central bank system in the U.S. And I think a lot of people think that the term Federal Reserve implies that it's a function of the government, which it's not. It's an independent group representing 12 very wealthy family entities. And in the past, they used to meet, clandestine way. They'd meet on trains. And then as future progressed, then they had Jekyll Island. There's a book, The Creature from Jekyll Island by Ed Griffin. Really good book if you're interested. People are interested, your listeners are interested in really learning more about this. And they took and they committed Ed Griffin into a mental institution, which, we can get into all the conspiracy theories of that, et cetera. But so we have the central bank. Then they would meet at Jekyll Island. And Jekyll Island was not part of Georgia at that point in time. The island was actually owned by the Federal Reserve. And if you go there to visit, they have the hotel. Each corner of the hotel has like a column, like an old castle tower, kind of like where the military would protect the castle. And each of the families had their own corner in this hotel. And then you can actually go into the boardroom, and the names are on the back of the chairs of the 12 family representatives that are there, Rothschilds, J.P. Morgan, Kennedy, et cetera. They're all there. Everything's there to see. And then eventually, I think a future came and the Federal Reserve deeded Jekyll Island to the state of Georgia. And so, it's interesting in history to see how this clandestine nature has happened. Then we get into Alan Greenspan's Federal Reserve, where, it was so cryptic. There was even the jokes of Fed speak when Greenspan would talk, and he would say things that nobody could understand what he was saying, but I'm convinced that it was, the evil genius. He was doing that on purpose. He didn't want people to understand. And now we're at the point where, what a different Federal Reserve we have now, where those guys all think they're celebrities. They're all, out there giving interviews and talking, and it's just amazing to see the evolution of it. But to go back when I would get into, and I just barely scratching the surface of my soapbox in the Federal Reserve, but when I would talk about this kind of thing and the frustration of the whole entire foundation of the United States of America has been, retroacted right back to the way we were under the Bank of England, having a central bank, basically having, and this is the important thing, an independent group, a very small independent group controlling all the money. They control all of our money, and why people aren't more frustrated or up in the arms of that or more rebellious about that as our forefathers were is beyond me. But you know what was interesting to me, Andy? When I would do this and I would give this little talk in seminars, so many people would come up and say, I don't want to know that. I'd rather not know that. I sleep better at night not knowing that. And they would rather be like an ostrich and have their head in the sand than understand what's really going on. And it was mind-boggling me to realize that people just want to go through their everyday lives. And all this kind of stuff doesn't really matter as far as how the markets work and the fact that the people, us, we don't even control our own money. It's mind-boggling to me. So you talk about what caused the financial crisis. Well, all of this was, and there's charts we can go through again. We could do hours on this, but going back to the Greenspan, you can go back and look at the M2 money supply. That's anything that's liquid, right? Checking accounts, savings accounts, CDs, anything liquid is included in the M2 money supply. That's what the Federal Reserve controls, and they control it by buying and selling U.S. government bonds and treasuries. And that's where people think, oh, well, the Federal Reserve is the government. No, they're not. They're buying and selling government bonds and treasuries, and that's how they control the M2 money supply. And you look, when Greenspan came in, there, from the time that the Federal Reserve was created in 1913 to when Greenspan took over in the 80s, there was a very, very slight increase in the M2 money supply. But Greenspan came in and he had this view of let's create 3% GDP, because he felt that was a sweet spot, right? We could have a 3% GDP without having inflation. And so anytime the economy would begin to weaken, they would inject liquidity, things that we've come to hear commonplace now. And now you start to see the graph of M2 money supply moving to the upside. And that's when we started, the debt clock. If anybody hasn't watched the debt clock of the United States, you should do that, because it's so scary to see how fast that thing spends on a second-by-second basis. But so when I, just to regress a second, when I went to college, I have a business degree. So when I went through business, I learned that economies go through expansion and retractions, and you have growth and you have recessions, and it's all normal course of the business cycle. But what Greenspan's thought was, and I'm not sure that he was being so evil in this, maybe he was, but trying to avoid the contraction areas, and let's just keep injecting liquidity. But then it started to feed on itself. And you referenced the financial crisis of 2008 when everything blew up. We had that opportunity right then, Andy, didn't we? We had the opportunity. Let's flush the system out. We're so flush with all this cash, and now it's crashed. All these financial institutions and people, the companies were running wild by packaging, the collateral mortgage obligations, and they're putting them all together, and they're selling them 30 or 40 times, and they're packaging all these bad loans and putting them together and selling them.
And credit default swaps, right?
Exactly, credit default swaps, 100%. Exactly, that's exactly right. And they're doing all these things, and then the system crashes. And we could have just said, let's take the pain now. Let's flush the system out. Let's learn from the mistakes that we've made. Let's do it right from here on out. But what we did more of the same. Then we had quantitative easing come in, and basically what they did was they took what had gotten us into that position, and now it's on steroids. And now our GDP, our gross GDP is over 100%. And I know you know this. So basically, we're living on credit cards now because we can't get ahead at this point in time unless somehow we figure out how to get a GDP up around 6 or 7%, which China, claims they make. But if we don't have a GDP above 3%, we're going backwards. A GDP of 3% is holding our own. And how many quarters have we had GDP growth? We've had a few lately under President Trump. We never had one under the 8 years of President Obama. So the problem is that the cycle is getting worse and worse and worse, and somebody is going to pay the piper.
Absolutely. Let me ask you a question. Let me just interject.
Okay.
In today's markets, Rob, do you think that the market follows the Fed, or do you think, well, we know that other central banks around the world follow the Fed, okay? We know the ECB does. We know the Bank of Japan does. We know that. Do you think that the markets follow the Fed, or the Fed leads the markets?
Well, that's really interesting. And in the past, I would have said totally that the markets follow the Fed. What the Federal Reserve does is what drives the market. But I don't know now with Powell, he seems to be this new Federal Reserve type of a mentality that we have now. It kind of almost seems like they're more reactionary to the markets before. And I think that there was a defiance under Greenspan. And this is what we're doing. And it was very cut and dry with what they did. And then the markets followed along with that. But is there an air of the Federal Reserve feeling pressured maybe to listen to what the markets are doing and make policy according to that, which I think is a very dangerous thing, but that may be exactly where we're at. How do you feel?
It's interesting. I'll tell you, I look at gold and I look at the break to the upside in June when the Fed pivoted from tightening, officially pivoted from tightening to loosening credit. That's when they told us that the Fed funds rate would drop by the end of the year. That's when they told us that quantitative tightening to reduce the swollen balance sheet would end. And gold broke out above the 2016 high. The interesting thing, Rob, to me about gold, about the Fed right now, about all the markets, gold's making a commentary on fiat currencies. Fiat currencies, that have the full faith and credit of the governments that issue the legal tender. And, gold didn't just break out in dollars in June. Between June and September, gold made a new record high in almost every single currency, except for the dollar and the Swiss franc. But in euros, in Japanese yen, in pounds, Australian dollars, Canadian, I could go on and on, rubles, Brazilian real, everything. Gold rose to a new all-time high. I think gold's consolidating now, but gold's doing something more. It's making a statement that's telling us that central bank policy around the world is devaluing currencies.
Oh, yeah.
And inflating. So I think the way the Fed, the way other economists measure inflation, when we get these inflation numbers, it's a bit of a misleader. Accounting is an art, not a science. And the bottom line is that gold is telling us that, there's a price to pay for all this liquidity. And that's why I continue to be bullish on gold. I think it's in a consolidation period here. I mean, as we're conducting this this podcast today. Gold's trading around 1470, 1475 on the nearby futures contract. I think that gold is not going back to the breakout level, which was below 1400, and I think that the path of least resistance is higher, and that's the commentary. Anyway, listen, we could go on for hours. I appreciate the history lesson on the Fed is fascinating, and perhaps we can talk more about that in a future podcast. I want to wrap up by asking you a bit about your service that you put out for subscribers that'll be on the Option Hotline eventually, and once we get that up and running, and what you do now, and how you distribute it now, and what's in it, and just give us a little brief synopsis of what you offer.
Okay, and I'd love to do that. If I could backtrack 1 second before I get into that, because you touched on something talking about currencies that I really wanted to throw out there. And this, everybody loves a good conspiracy theory, right? And so remember, we had the colonial scripts, and then we went into, and the U.S. minted U.S. dollars, and then when the Federal Reserve Act was passed, everything after that has the words Federal Reserve note on the back. And I would always in a seminar ask people, take the money out of your wallet and open it up and look at it, and what does it say on there? And it says Federal Reserve note. And what's a note? A note is a debt, right? It's a promise to pay. It's fiat currency. As you said, we went off the gold standard, 71. The dollar isn't backed by anything after that. But here's a really good conspiracy theory for people just to have a little fun with it. Well, I shouldn't say fun with it because it was a bad time in our country, but the JFK assassination, one thing with John F. Kennedy, when he was president, he wanted to bring back control of the money. He wanted to bring back control of money supply to the federal government. He wanted to abolish the Federal Reserve. And so in 1913, he actually commissioned no U.S. dollars to be sent out. And here's one. Here's a $2 bill, and the date, I don't know if you can see it on there or not, but the date of the issuance is 1963. And when you look on the back of it, it says United States dollar, or United States of America, $2. Nowhere does it say Federal Reserve note on there. And what year did Kennedy get assassinated? You start to
1963.
Yeah.
By the way, I'm 60 years old. It's my earliest recollection from childhood was the day that I was with my mom and dad. I remember at Sears Roebuck. I remember that day. It was kind of my earliest recollection, but that's fascinating. And I must say, I think that President Trump would like to abolish the Federal Reserve based on his consistent criticism of his appointee, Chairman Powell, and the rest of the members of the board.
I totally think he would too, but I think somebody's probably, this is 100% true story, Andy. I was doing a seminar, and I would do my soapbox speech. Every time I do an educational seminar in the world of trading, I'd divert and I'd do my little soapbox speech on the Federal Reserve, which you just got me to give a little piece of here. But 100% true story. It was in Washington, D.C., and I did my little speech, and then we took a break after going through that and everything. And a lady came and she grabbed me by the waist and she took me back behind the screen, and she introduced herself, and she said, I work over in the White House. She actually literally worked in a little desk right across from the travel office. This was back when Bill Clinton was president and Hillary, the whole travel gate, remember all that stuff? Mm-hmm. She worked right across from that. And then she told me some stories about that, which, there's hearsay, so I won't get into those. But the thing that she told me is that you need to stop saying the things that you're saying, because people that talk like you disappear.
Oh man,
she said that, and it was like,
that's scary.
You're watching the DC and you're criticizing the Fed, and you're talking about it actually got my attention. I have to admit that when she said that, it got my attention. But anyway, thank you for asking about Elliott Wave options. Basically, what we have an alert service. It's an educational alert service. In other words, we don't just send out alerts. There's a lot of companies out there that send out alert services, but we want to be an educational based service too. So we offer a lot of education, and it's primarily based on technical trading using, as our name suggests, Elliott Wave. And I know that there's been times in the past where Elliott Wave has had differing views, but it's interesting that I think over time, it's lasted over 100 years. It's a technical system, and I think when people really are starting to realize that, there might be something to this, because when Ralph Nelson Elliott created it, his whole thing was I think that the markets are supply and demand driven by fear and greed, the masses, as you talked about, and he felt that he could write a mathematical algorithm that could analyze that activity in the past. And then based on that analyzation of market sentiment in the past, you could come up with a reasonable assumption. If you found the same set of circumstances in the future, you could make a reasonable assumption that the results could be similar to what had happened in the past in that same set of circumstances. And that's really all Elliott Wave is. So we have a service, we have an alert service that sends out alerts based on a couple of different strategies. And we do that over and over and over again.
I love it. I love it.
Strategy.
I love it. So, to go back to the baseball analogy, Rob, Ty Cobb was probably the greatest hitter of all time. Our modern day greatest hitter is probably Ichiro Suzuki.
Agreed.
These are guys who hit singles. They went to the Hall of Fame because they hit singles. And you know what? World of investing, hitting a lot of singles adds up to a lot more than swinging for the fences, because when you swing for the fences, you strike out more often than not.
Could not agree with you more.
So the service is ElliottWaveOptions.com.
Correct.
And Rob Roy, we could go on for hours. We'll do another podcast, but I want to thank you so much for participating today and being here with us. And if anyone has any questions, they can send it along to us at the Options Hotline. So have a great day, Rob, and thanks so much.
Thank you, Andy. Appreciate being here. I had a blast. Hope we can do it again soon.